strong.
So one of the first questions that I generally get asked from a new client is, the first thing is, what is the best rate that I can get? Now, we can't actually give you a rate until we know what you're actually looking for. So this is where the product selection comes in. So you've got variable rates, you've got fixed rates, and then you've got basic loan products and as well as packaged loan products with an offset account attached. So all of this part of it needs to be worked through before you can actually decide which product you need, which lender, and then narrow down the rates from there as to which one you would choose, which is most appropriate for you. So with the basic loan, these are either fixed or variable. With the variable rate product, you can actually pay as much as you like off that rate. And then if you needed to get some of that money back, you can do a redraw. So the basic loan is very much no bells and whistles, not too expensive to get into. Quite often there'll be an application fee. Generally not a monthly fee, but it will depend on the lender that you're choosing. And you can pay as much off that loan directly as you would like to, and then if you want to redraw some of that money back at any point, as long as you've paid over and above your minimum payment, you can redraw that back if you need to. So that's your basic product. In comparison to that, you've got your package loan. Now, most lenders will charge somewhere between $248 per year and $395. Most of them are at $395 per year, but what that gives you is a discount on your interest rate. It gives you an offset account, and you have a lot more features. It gives you all the bells and whistles really that you need. So under the package loan, let's talk about how that actually works. You've got your loan set up for you, but then you also have an offset account which is linked. Now, the offset account is really just like an everyday transaction account that all of your pay will go into, and you can have your debits come out of. It can also be linked to your ATM card so that you can use that whenever you go shopping. Now, with that offset, what it's actually doing is, say for example, you've got $100,000 on your mortgage, on your home loan, and then you've got $10,000 sitting in your offset account. Effectively, the bank is charging you interest on the gap between the two. So if you've got a $100,000 loan less the $10,000 in your offset account, they're charging you interest on $90,000. Now, my little disclaimer in here is that the interest is charged daily and is calculated daily and charged monthly. So you won't see that you actually you're not earning any interest, but you're actually saving that interest from what you would have otherwise been charged. So there are quite a few little bits and pieces that need to go along with that, which a financial planner is really the one that's to describe that for you. So that's just the gist of how an offset account works. But you've also then got a fixed rate loan. So if you wanted to split your mortgage and have, say you've got $300,000 in your loan altogether, you can have $100,000 on a fixed rate, $200,000 on a variable, and then you can have your offset account linked to your variable rate portion. Now, majority of the lenders under the package will give you a 100% offset account, which means all of the money sitting in that offset account is working for you against your variable rate mortgage. The odd lender will allow you to have one against your fixed rate, but there's not too many that do. And if that is the case, some of them don't actually give you a 100% offset of your money. It might be a 40%, for example, or a lesser percentage. But your mortgage broker can actually go into that for you in more depth. This is just to give you an overview of how it can work. Now, with the package type of loan as well, if you wanted to switch between products at any point, you can generally do that without an extra fee or an application fee because you do pay the annual fee. Okay. Now, part of the variable rate package as well is that you're getting a discount off the standard variable rate. So when you calculate what that percentage means to the loan amount you're borrowing, you're generally going to save well and truly more than your $395 a year that you're paying in that fee. Okay, so thirdly, you've got fixed rate loans. Now, really they work like a basic loan. You can have it just there that you pay your minimum payment off. You can pay extra on your fixed rate, but you're very limited as to how much extra you can pay off whilst you're on that fixed rate. So every lender is a little different. Some will allow you to pay an extra $5,000 a year, some are 10, some are 30,000 over that fixed rate period being 2 or 3 years. So overall, you've got your basic loan, you've got your package loan. You can split it into two portions with fixed and variable under the package, or you can just have your basic fixed rate loan as well. Strong.